Good morning, ladies and gentlemen. Welcome to the Zeder full year results presentation. My name is Johann le Roux, and today I'll be taking you through a short presentation of what's transpired at Zeder throughout the past financial year. On the agenda for today, I will discuss the noteworthy transactions throughout the period. As you're all probably aware, the disposal of the logistics group and also the unbundling of Kaap Agri. I'll spend some time on our strategy. Our strategy hasn't changed. We need to create maximum shareholder value. I'll spend some time on our financial results, specifically our sum of the parts. I'll also show you what the sum of the parts will look like post these transactions and also post the special dividend that was announced as part of our year-end results. I'll also focus on the effect what COVID has on our portfolio and also potentially the effect of the Russia-Ukraine conflict. I'll spend some time on our remaining portfolio, the prospects of Zeder, and there'll be time to answer all your questions at the end of the presentation. If I can ask if you can please email your questions to cosec@zeder.co.za, and I will respond to your questions at the end of this session. In terms of the noteworthy transactions, the disposal of our shares in the logistics group, this transaction has actually been coming a long time. We signed the agreement in November last year. A circular was sent to shareholders in February, and then there was a special general meeting held in March. We sold our entire stake, 98.22% in the business, and it was disposed at about an 18% premium to the reported sum of the parts value at 28 February 2021. This disposal, as I mentioned, was duly approved by shareholders on the 15th of March at that special general meeting, and the conditions precedent were met subsequent to that and effective closing on the 31st of March. The valuation of the business the transaction was based on was for 1.6 billion rand. To date, Zeder has received 1.35 billion rand of the proceeds. There's still additional earnouts that's due to Zeder of about 218 million rand. And these are all linked to extensions or renewals of agreements, so it's not linked to profit warranties. And even though the timing is uncertain, our experience with these lease renewals shows that we will get them, it just takes time. So we're confident that these additional earnouts will be paid to Zeder during the next financial year, which is the 28 February 2023 financial year. In terms of our unbundling of Kaap Agri, the board resolved on the 28th of February to unbundle Kaap Agri to Zeder shareholders. This unbundling was also subject to certain ex-con approvals, which were obtained post-year-end. The valuation of Kaap Agri in our books on the 28th of February was around 1.6 billion rand, so the unbundling value per share would be about 1.03 rand per share. In terms of the unbundling, we believe it was in the best interest of Zeder shareholders. Zeder shareholders now have a direct interest in Kaap Agri, which I think has been favorably received by the market. And the unbundling will also theoretically eliminate the discount applied to the Kaap Agri shares previously in Zeder's sum of the parts. Zeder's had a long history with Kaap Agri. We're very proud to be associated with this group. We've been a shareholder for over 16 years, and if you take this business way back, Kaap Agri actually had an interest in Pioneer Foods. That's a business that was listed and bought out by PepsiCo 3 years ago. Quantum Foods is also a business that came from Pioneer Foods. So this was, there's been a long history with this group. This business can stand on its own feet. We think there's some really good growth prospects for it. And under the leadership of Sean Walsh and Graham Sim, we would just like to wish them all the best of luck for the future. In terms of special dividends, just want to take you back a few years. All the dividends that was paid in the last 3 years were declared. In February 2020, as part of that financial year, there was a dividend declared and paid to shareholders of 2.30 rand. That was linked to the sale of our interest in Pioneer Foods at the time, and it meant that about 3.9 billion rand was returned to shareholders on that specific dividend. Post that, in the February 2021 year, there was a further special dividend paid to shareholders of 20 cents per share. That was once again linked to the sale of our interest in Quantum Foods at that time, and there was also an additional 308 million rand returned to shareholders. Part of this financial year, as I mentioned, the disposal of our interest in the logistics group, there was a further special dividend declared of 92.5 cents. That means an additional 1.42 billion rand of cash resources that will be returned to shareholders in early May. And that brings the total funds that's been paid to shareholders over the last 3 years to about 5.7 billion rand. And I think we must remember that this is also over the main COVID period. And I think these dividends would have been very attractive in the hands of our shareholders. In terms of our strategy, as I mentioned, our strategy hasn't changed. The objective remains to maximize shareholder wealth. We can do it in a few ways, focus on our portfolio and grow our investee portfolio companies. I think the favorable agri conditions has been good for our portfolio, and I think we've shown that there's some good growth in our portfolio over the past few years. I've just mentioned the dividends that's been paid to shareholders, we definitely focusing on cash flow generation within our portfolio, and obviously, as and when we sold assets, there's been special dividends to shareholders. And then obviously, thirdly, one has to evaluate transactions on a continuous basis, and I think if one can do disposals at the right price and at the right time, that's obviously also a focus area for us. So in the past year, the logistics disposal and the Kaap Agri unbundling had a positive effect on our strategy. I think if you combine these with the prior corporate actions, these transactions were all done at premiums to their sum of the parts. There's been decent value created for Zeder shareholders. And if you combine the special dividends and the rand per share value, on the Kaap Agri unbundling, it means that over the past 3 years, about 7.3 billion rand has been returned to Zeder shareholders. And this should theoretically eliminate the discount applied to the cash return that was on the balance sheet, and obviously also the Kaap Agri shares that were unbundled to shareholders. I think this is quite an important slide for us. On the left-hand side, you'll recognize all the companies that has been a part of Zeder's portfolio, and some still remain today. The black column at the top, the 28th February 2019, that is our reported sum of the parts at part of that financial year end, 9.6 billion rand. We had 1.7 billion shares in issue, sum of the part value of 5.74 rand. And at that time, we were trading at about a 25% discount to the sum of the part value, which means a share price of 4.23 rand. If you take us a little bit further back towards the right, what I've indicated there is what our sum of the parts would look like post the special dividend payment in May. So we would still have the investment in Zaad, the investment in Capespan, we would still have our investment in AgriVision and also cash on the balance sheet. So if you take that 4.1 billion rand sum of the part value at that time and divide by the shares in issue, it gives you a sum of the part per share of around 2.70 rand. And then if you apply the same discount, and Zeder currently do trade at more or less the same discount that it did in 2019, it gives you an implied share price of 2 rand. Now if you take that 2 rand and you add back the value that's been given back to shareholders so far, the 2.30 rand Pioneer special dividend, the 20 cents Quantum special dividend, the Kaap Agri unbundling, and also the current year special dividend, that leaves you with a indicative share price of 6.48 rand to Zeder shareholders, which means that over time there's been 53% growth in the share price over the past 3 years, which is an effective 15% per year. So in terms of that, for Zeder shareholders to have implied share of 2 rand with a value of 4.46 rand given back to shareholders over the past 3 years, I think it's quite commendable. And I also think one must remember that this is over the main COVID period when it's been tough for many businesses. In terms of results, it's for the past financial year. I think in terms of COVID, I think we all know the impact on South African business. We've seen GDP retraction. There's been some normality in small growth. Last week or the week before, the unemployment rate was announced, and there's once again an increase in that, which is obviously not good for South Africa. The economy is struggling, and we're still operating in a relatively constrained environment. But having said that, I think Moody's last week, even though SA remains downgraded, we're from a negative to a stable outlook, so one can see that as promising. And SA has also ended our national state of disaster. So it does seem like the worst is over and some normality is restored. But yes, our economy obviously still remains under pressure. So the impact on Zeder and his investment portfolio, as I mentioned before, the management teams were very proactive and they implemented measures, quite quickly. But we're still seeing significant supply chain constraints leading to increased costs and margin erosion in our portfolio and also in certain of the industries that we operate in. I think the inefficiencies at South African and global ports, remains a major obstacle. It leads to increased costs and delays, and especially on the fresh fruit industry, that's definitely been negatively impacted. If you're trying to move a perishable product through ports, from the southern to the northern hemisphere, it's definitely impacted by delays, and obviously delays affect the price that you can realize in the market. But having said that, I think our portfolios remain resilient. We've got very good management teams, but there definitely remain supply chain challenges within our current Zeder portfolio. In terms of the most recent thing on people's radar, the Russia-Ukraine conflict, the impact on SA and business, I think we've all seen the increase in oil price. If you've been to the petrol station recently, you'll feel it in your pocket. And also an increase in soft commodity prices, which we've probably not seen as a consumer yet. This leads to a higher inflation environment, and I think one can say with confidence that will lead to an acceleration of increased interest rates in the foreseeable future. I think if one needs to be honest, the consumer in South Africa needs to brace itself for serious food inflation. I think the food producers specifically will become under significant margin pressure. And unfortunately, this impact will mostly be on the poor again, with increased transport costs and basic food prices. So what is the impact on Zeder and its investment portfolio? We are obviously aware that this conflict only started in February, and most of our portfolio companies have a December or earlier year end. But what we can see to date is pressure on agri-input costs, fertilizer and fuel. Fuel is a key ingredient, if I can, in the agricultural sector. So that will definitely lead to increased inflation. Not only the inflation, but it's also the availability of key agri-inputs. Some of our raw materials come from China. It's a little bit more difficult. Some fertilizer elements come from the Ukraine. They're a very big fertilizer market. So the risk remains of agri-inputs also not being available, for certain planting seasons. And in our sector, if one has a planting window, once you miss it, you can't plant. So I think the availability of agri-inputs is also going to be very topical going forward. Obviously, the highs of soft commodity prices can be positive for certain farming sectors. I think specifically of the increased wheat price of late. But the inflation that farmers will feel on the farm, is going to be significant. But having said that, once again, our portfolio is strong. There is definitely a management team that's proactive, so we're trying to be proactive and is aware of all the challenges. In terms of our results for the year, our sum of the parts, this is obviously at year end. We've seen an increase from R4.33 to R4.66 per share. It's largely as a result of the increased valuation in TLG as a result of the disposal, and also Kaap Agri's had a great year in terms of the increase in their share price. That's obviously countered by the 20-cent special dividend paid in May last year. So if you kind of add that back, it's an effective 12% per share growth in our sum of the parts for the year. The discount remains. The discounted rand value has, however, become smaller as we've paid special dividends and also unbundling of Kaap Agri. And the discount is not unique to Zeder. I mean, it's everywhere in terms of investment holding companies. In terms of our post-year in some of the parts, it's on the 4th of April, and I'll show you a table of what it looks like. It's obviously materially different. Kaap Agri and TLG no longer part of the Zeder group. The TLG transaction closed, so we've got a significantly increased cash balance of about 1.86 billion on our balance sheet. In terms of our balance sheet, the board's declared a further special dividend of 92.5 cents and to Zeder shareholders. This will be paid in May. That will leave us with just over 400 million rand in the bank. We'll still be in a good position to support our portfolio companies. And yes, I think the question may be why do we still have such a significant cash balance on our bank account, and why don't we increase the special dividend? And I think we're just taking a cautious, conservative view. We're still in COVID, and I'll elaborate a little bit more on the impact on our portfolio. We still have this Russia-Ukraine conflict. One's not really sure how it will play out. So, one must remember that in terms of the remaining assets, ZART and Capespan, Zeder is the shareholder that owns in the high 90%. So we need to be ready to assist our portfolio companies if required. At this stage, it's not required, but I think it's prudent to leave cash on the Zeder balance sheet at this stage. So in terms of some of the parts, what it looks like, we've got the 28 February 22 numbers there. That's the R4.66, and the 4th of April, you'll see the logistics group obviously not being part of the group anymore, as well as Carb Agri. The increased cash balance, that's additional 1.35 billion we received as part of the initial payment on the TLG disposal. That leaves us with the sum of the part value per share of R3.62 as on 4th April. As I mentioned, there is a 92.5 cents special dividend that will be paid in May, which will mean that our sum of the parts value at that time will probably drop to about R2.70 per share. In terms of our portfolio review, in terms of our remaining 3 investments, ZART, by far the biggest investment in our portfolio. These are all the brands. Agricol is mainly a sunflower business. It had a very good year. K2 is our African seed business, focusing on maize, as well as Seedcore. Bakker Brothers is our Dutch business. It's also where we have all the IP on our business is located in the Netherlands. So if we have a business in Zimbabwe, the IP is not in Zimbabwe, it's actually in the Netherlands. Farmag is our agricultural chemical business. Maize Seeds is our business in Turkey. East African Seeds is the transaction we closed in the past financial year. Very excited about that transaction and the growth that could mean for our company. Hydrotech is our vegetable and also chemical adjuvant business. That business has completely been restructured, so it's going well there. And Sorghum and DLF are 2 joint ventures that we have. SciCorp Laboratories is our own in-house laboratory and testing facilities. Unfortunately, one has to have one's own facilities nowadays to test our own genetics for seeds. So how did this business fare for the last 6 months? You remember at half year I reported that ZART's actually changed at year end from January to June, so it's a 6 months period now. It's had a very good 6 months. I think one must remember that this business makes its money from 2 different cycles. We've got businesses as operational in the southern hemisphere and also in the northern hemisphere. The first 6 months of December is mostly earnings coming from the southern hemisphere operations, where the second half comes from the northern hemisphere operations. So you can't just take these 6 months earnings and double it. But to date, it's going well in this business. You'll see the debt increasing on the balance sheet there at the bottom. And that is as a result of the 180 million rand bridge loan that Zeder advanced during a year to do the EA Seeds acquisition. Just in terms of that, the Zeder board has asked us to look at options, and we will probably convert that debt into equity. The full Zeder bridge loan currently is about 325 million rand. So if we convert that to equity, it'll have a significant impact on the debt of the balance, which we think will be favorable for ZART. Just in terms of the valuation, we've increased the valuation slightly. We're still taking a cautious view. Bakker in the Netherlands, it's still impacted by COVID. And the main reason is that we've quite dependent on some UN tenders that hasn't really been restored. But also a lot of Bakker Brothers' seeds are developed and grown in different countries. Therefore, they need to move. So Bakker is more exposed to supply chain constraints than pretty much any of our other businesses where seeds are produced in country. What that means is if you've got a supply chain problem and you can't get the seed to a specific country in time, you miss a planting season, you sit on the stock for a year. And Bakker will only know in the next 6 months, in what way they've been restored to their previous profitable levels. Agricole's had a very good year. It's mainly our sunflower business. There's been an increase in sunflower hectares planted in South Africa specifically, so that's been favorable for Agricole. And also a lot of the maize farmers that planted maize early in the year lost their crops due to unseasonal heavy rains, and the later window is more favorable for sunflower. So farmers then did not plant maize again, they rather planted sunflower, which is good for Agricole. Farmax had a very good year. There's a big focus on this business to grow into South Africa and especially the Western Cape. And that's actually gone quite well for the business, and we hope that they can achieve a record year this year. Mayseed in Turkey is still early in the season. Their main season is the next 6 months, but things still look very promising there. As I mentioned, the EAC transaction got concluded. We're excited about that. That's a big distribution hub in East Africa into Kenya, Uganda, and also the Rwanda areas. And our aim there is to push our Zard seed varieties and our own genetics through those distribution channels. So in terms of the Russia-Ukraine conflict, Mayseed, the business is located in Turkey. We do trade with Russia and Ukraine, probably only 7% of Mayseed's turnover. We are monitoring it. We don't own any physical assets in Russia or the Ukraine, but they are trading partners to May. And we do believe that from this there could be some opportunities for maize seeds. Turkey is a wonderful environment to grow and produce seed, and if some of the other markets are potentially closed, one could see seed production in Turkey increase, and that will be favorable for maize seeds. So in terms of this business going forward, we do think high input costs is going to affect farmers. Sunflower is a business that does not need as much agri-inputs like maize, and that could probably mean that farmers, when they need to make the decision whether they're going to plant maize or sunflower, maybe they'll lean more towards planting sunflower. It's got a much lower cost base per hectare to plant. But the focus on this business is, after the EAC transaction, I think we've got all the foundation is solid. We've got all the building blocks that we need for this business. The focus is now on developing our IP, on margin enhancement and cash flow generation for this business. In terms of the valuation considerations, we do value Zard on an EV/EBITDA multiple. We look at other comparable companies. We have a sample. We work on averages, and then we apply those multiples in two different areas. Seed and the chemicals multiple. Farmag is a big part of this business, so it makes sense to kind of allocate its own multiple to the chemical side. And then the EBITDA that we use, we normalize it, and we adjust the full effect of hyperinflation in Zimbabwe. The hyperinflationary environment can often lead that you boost your EBITDA, so we add back that effect completely. And obviously part of the year-end processes, these valuations were audited by our auditors, Deloitte. In terms of the net debt, obviously we deduct the net debt after we've applied the multiple to the EBITDA. And as I mentioned, Zeder will be converting that bridge loan to equity in the next financial year. In terms of valuation, yes, the earnings have increased by 23% for the 6 months. We're still following a cautious approach, so the valuation did not increase as much as one could potentially expect with that increase. But as I said, we're still experiencing challenges with COVID, and especially on Bakker, and we need to monitor what this Ukraine-Russia situation is going to have on our portfolio. Capespan, our farming and global marketing business. This business is focusing on 3 commodities: pome, which is apples and pears, grapes, and also citrus. Citrus probably the smallest part of this business. We have farms in the Clanwilliam area and also in the Southern Cape. In terms of our pome division, we've got very big farms in Elgin and the Verliersdorp area, also with a pack house located in Paarl with cold storage facilities. And our grapes, we've got big grape farms in the Northern Cape and also in Namibia. The global fruit business, offices in some international offices. The business has been restructured significantly over the past 3 years, so really operating off a much lower cost base. In terms of the performance for the year, Capespan do have a December year end. We've seen fantastic performances on the farms in terms of volumes. But unfortunately, there's been some significant challenges, as I mentioned, in the SA fresh fruit industry, mainly as a result of COVID, that's leading to increased costs and lower prices realized in the market. Still a profitable business, 54 million rand for the year. And you'll also see that the pressure on supply chain means that the cycle is a bit longer, you get paid a bit later, and that's one of the reasons why the net debt at end of December is a bit higher as in the previous year. Then in terms of our valuation of Capespan, I think taking into account all the challenges experienced in the supply chain, we've decreased the valuation slightly to accommodate that. But the business is experiencing supply chain constraints. There's lots of inefficiencies at our South African ports and globally, in supply chain, and this is leading to higher costs. I think on the grapes alone, one can probably factor in just for additional supply chain costs 15 to 20 rand for a carton, and that's significant in a grape farmer's life. In the past, when there was adequate and sufficient ships around, ships would wait outside the ports. Nowadays, if you wait for a day, the ships just keep on sailing. They bypass the port. You got to wait for a new one. And obviously, being in the fresh fruit industry with cold chain, you need to maintain the cold chain. Once your fruit is packed in a cold chain environment, you need to keep it in that cold chain environment until it pretty much gets to the retailer in the northern hemisphere. Which means if your ship's delayed or there's any efficiencies, that cold chain needs to be plugged into electricity, and obviously we all know electricity costs have gone over the last few years. Now, in terms of that, also the longer lead times for perishable products, it leads to quality control issues, or not control issues, just leads to quality issues. And that obviously means you'll realize much lower prices in the market. I think people often ask, but the fresh fruit is in a cold container, how can the quality be a problem? It's like anything that you keep in your fridge. You can't keep it for too long. I think some of the lead times, I think the shipping, or not the shipping, the supply chain lead time from transport to getting paid to the EU was about 70 days. I think that's now well over 90 days. So that's a 30% longer lead time in terms of getting your products to the retailer. In addition, the Russia-Ukraine conflict, even though it was only in February, those markets are effectively closed for certain producers, or some people are hesitant to export because obviously there's a risk of you not getting paid or don't necessarily want to be paid in rubles, which means that fruit must move somewhere else. The normal place for it to move, if it's not Russia, would be to the EU market or the UK, and that obviously will lead to additional price pressure. But having said that, our farms are really world-class. We've had exceptional volumes on the farms. I think, we're very happy where our farms are. We have the best varieties that's in most demand internationally. We had full production on our grapes farms. We've spent capex on our poem farms over the last 3 to 5 years as bearing the fruits in terms of netting and yield and quality. And it's really a pity that these supply chain constraints kind of affected the profit numbers of the business when there's been such an exceptional performance on the farms. I think it's also important to note that these supply chain problems, it's not unique to Capespan. I think if you're in this industry, you are unfortunately a bit of a price taker. But the key thing going forward is going to be to manage the volumes, pack your best fruit, send it to your best markets, try and retain those prices, and obviously take market risk into consideration. In terms of our valuation for Capespan, once again the same methodology followed. We use a Capespan Group NAV and we adjust it for independent third-party valuations that's performed on all the farms, and we use an earnings multiple for our associates. We have 3 associates, one in Asia, one in Turkey and one in India. The one in India has had a fantastic year, so that's been good for the business. And then we apply a market-related discount to the Capespan Group NAV, as I mentioned above. In terms of Agrivision has been a tough investment for Zeder. Having said that, it has a record year this year. We are co-shareholders with the IFC and Norfund in Agrivision Africa. And as a combined shareholders, we have 3 divisions here. We have the Somawe farming unit, the Mukushi farming unit, and also a milling operation. We've made the combined decision to sell the milling operation. We just, not really an asset that's performing for us, so we will probably exit that investment in the next financial year. So just in terms of the performance, it's also had a December year end. For the year, it's made $7.2 million. Their results are all in dollars. I mean, that's a fantastic year. This business has been under some debt strain in the past and has managed to reduce its debt significantly from own operating cash flow. And you can see it there in the bottom line from December 19, $21 million to just over $8.5 million. So it's alleviated some pressure on the business. We've kept our valuation, however, unchanged. I think we obviously know the history that we've had with AgriVision, so we've trying to have a conservative approach. But the results are due to sufficient water at our Makushing farming area. That's an area where we've mainly had problems with water. So water there means you can plant your full wheat crop, which is obviously great for us. We've seen promising yields in terms of soya and wheat, and obviously the high soft commodity prices, it kicks directly to the bottom line. Zambia, however, remains a challenging environment. We haven't had the summer rain that we normally expect. The rain's a little bit late. But the focus for this investment will be on managing inflation in terms of the cost side and also the timely availability of agri-inputs. Zambia is a landlocked country, so you need to plan your agri-inputs probably a little bit more carefully than someone that has got ports, for imports and for getting access to those materials. Going forward, our view is that the high soft commodity prices will probably remain, high in the medium term, and AgriVision should benefit from these increased prices. It, however, remains a difficult investment for Zeder. It's small in our life, but we'll make a decision on how we can maximize value here soon. In terms of the valuation considerations, pretty similar to Capespan. We take the AgriVision Group NAV. We adjust it down for specific risk factors. Zambia as a country has got more risk than South Africa, so we'll obviously adjust it with a much higher discount. And once again, we've done independent third-party valuations on all the farming blocks, and that would get us to our dollar valuation that's translated into rand. So just in terms of the prospects for Zeder, I think we'll continue to grow and support our existing portfolio. Agricultural conditions remain mostly favorable on the ground. As I said, if you look at Capespan's farms, we've had a wonderful performance. If you look at the AgriVision farms, we've had a great performance in terms of yield. But these supply chain problems and also the Russia-Ukraine conflict, will have an impact on the portfolio. These global supply chain challenges, is resulting in inflation pressure and will probably remain with us for a while. In terms of the approaches that we've received in our portfolio investments, you'll notice that we withdrew our cautionary yesterday. But having said that, the board remains engaged with several third parties on various of our portfolio assets. The funding terms and other key considerations on these approaches are not certain and also not final, and that's the result. We've withdrawn our cautionary. We've been on a cautionary for a year. We've done the 2 transactions, but the board is still considering various wealth maximizing options. As we've done in the past, we're transparent with our shareholders and we'll report back to the market, when appropriate. And once again, if there's a transaction to be done, we'll do it in the best interest of shareholders in order to maximize shareholder wealth. I think to do good transactions takes time, so shareholders just need to be patient with us. But in terms of our overall strategy, nothing's changed. We need to maximize shareholder wealth for our shareholders, and I think we've been successful in doing that over the past few years. That, ladies and gentlemen, brings me to the end of my presentation. We'll now go over to questions. If you can maybe just give us a minute or two to collate all the questions. The email address was in the SENS and it was also at the beginning of the presentation. So I'll be back with you shortly. Thank you. And thank you for your patience. We've got quite a few questions that's come in. The first question is, Zeder's value unlock strategy seems very clear. So what's the purpose of keeping around 400 million of cash post a special dividend? I think, as I mentioned before, we still want to be in a position where we can assist our portfolio companies, even though they are all performing well and there's no need for capital. We're still under supply chain constraints and the Ukraine COVID situation. So, we also, in most cases, is the shareholder of reference for these investments. So, we need to be able to support these investments if so required. The next question is, Zaad has built a nice portfolio of global seed assets over the last 10 years. Can you share some insights into the outlook and strategy for Zaad from here on? Yes, I can. As I mentioned, I think we've got all the building blocks in place now for Zaad. It has a focus on the emerging markets. Our focus is now on getting our own IP genetics in terms of seed through our distribution channels, and in order to optimize and enhance cash flow and margin enhancement. So that's the strategy for Zaad. The next question, the growth of Zaad's recurring earnings does not seem to be fully reflected in the adjusted valuation for Zaad. Yes, as I mentioned, this business definitely has a southern and northern hemisphere window where we've banked the profits of most of the southern hemisphere investments now. The northern hemisphere investments, especially a business like Bakker, we need to make sure that the business can return to its previous profitable level, and therefore, in our view, we've stuck to a conservative approach. We'll obviously evaluate the valuation again at our interim results. The next question is the earnout of 218 million for TLG included in the 4th April sum of the parts? Yes, it is. It is included under the other net assets in that slide. The next question is, the Zaad and Capespan valuations seem low given how well the agricultural sector is performing. Is there a reason for this? We believe the valuations of those portfolio companies are fair. I think in terms of Zaad, I think I've explained a little bit why we haven't adjusted the valuation upwards in terms of the earnings. And I think also from a Capespan point of view, while the business is still experiencing all these supply chain problems, we're taking a cautious approach. And we must remember that Capespan also have farming operations. Even though the farming operations are performing very well in terms of volumes, it is unfortunately also exposed to the supply chain problems experienced in international markets. There's a question, what is the plan for the large cash holdings at the group level? I think, to be perfectly honest, we'll probably not pursue new investments at a Zeder level, but as I said, we need to be in a position to support our underlying portfolio in terms of transactions, acquisitions, where they see growth. Then there's a question, thanks for the results. Zeder is now rapidly slimming down. You've withdrawn your cautionary. Can I ask on Capespan, given the emotive issue with land and agriculture, is the asset under consideration for sale? And I assume BE considerations be hindering any potential transactions. As I mentioned, the board's still discussing various approaches, also on Capespan. And currently, there isn't a BE consideration that's hampering conversations there specifically. Then there's a question, any update on discussions regarding Agrivision and your partner in that asset, which has been slated for sale for some years, but has not led to any disposal? Yes, it is a difficult asset. I think we have announced to the market that we would like to exit that asset at the appropriate time. I think our focus on Agrivision has been to get the debt levels down to a level where the business can operate sufficiently, and we've had a very good year. We think the debt levels is there now, so we're pretty confident that we can make some headway on Agrivision. But once again, we are shareholders there with the IFC and Norfund, so any decision on that specific asset will be made on a combined shareholder basis. There's a question on what the other assets is on our sum of the parts. The other assets on that slide includes our Agrivision investment. It's also got that 325 million rand loan to ZART that we'll be converting soon. So those are the two main items in the other assets in our sum of the parts. Then there's a question of whether we've accounted for any of the earnout proceeds. Yes, we have. It's under the net other assets bucket in our sum of the parts, the full amount. And there's a question, please comment on the board's deliberation on the withdrawal of the cautionary despite interested parties still being interested in the target assets. As I mentioned before, the board is still having a conversation, but none of these funding terms or key considerations are certain, and they're also not final yet. And as a result, we don't see a transaction being imminent, and therefore we've withdrawn the cautionary. There's a question, can you guide us on whether Capespan will be sold in totality, or do you think the farms will be sold individually? I think once again, there's no decision made to sell all Zeder assets. So, we've had people approach us on various of these assets. We're entertaining discussions there, and it would never be first prize for us to break up a business. Capespan is an integrated business, with the farms, with the marketing. But yes, I assume if one would want to go that route, that would be an option. There's a question about with the cautionary withdrawn, am I correct that the company can now repurchase shares in the market? How much of the cash on the balance sheet could be considered for buybacks? Yes, you are correct. We can potentially buy back shares in the market, but we've done the math. You have to buy back so many of the shares, to really make a difference in terms of your sum of the parts. So I don't think it's a real consideration for Zeder at this stage. I'm just going to wait 1 or 2 minutes if there's any more questions. There's a question, if you're still engaged in discussion with third parties, why withdraw the cautionary? As I mentioned, we don't, there's still funding terms and key considerations that's not certain on these discussions. And as a result, we don't feel like a transaction is imminent. But once again, if it changes, we'll report to the market and do the relevant. We're just giving another minute or so to see if there's any more questions. It doesn't seem like there's any more questions. Ladies and gentlemen, thank you for your time today. We really appreciate it. That email address at the start of the presentation will still be active and live. So if you have any follow-up questions, please send them and I'll be able to respond. Hope you all have a nice long weekend with family and friends. Thank you very much.